So this is a video about Cameron Stewart stocks, or stocks that have been featured by Cameron Stewart on his YouTube channel. I personally really like his channel, the way he evaluates stocks, and it's helped me stay away from some potential irrational, exuberant stocks, which have fallen quite a bit in the last month or two. So he's covered around 90 to 100 companies over the last year or two. I think he started his channel in 2020. And one issue that I've had was keeping track of where all these stocks are at. The stocks go up and down all the time, and it's hard to stay aware of potential opportunities. So what Cameron Stewart does is he projects the internal rate of return for all these companies over 10 years, and as the stock price changes, that number will change as well. So he also has a investing course for $300 if you want to learn how to analyze stocks like he does in his YouTube channel, which is, I haven't ever taken the course, but been thinking about it. So what I've done is I've actually made a spreadsheet which shows all the companies that he has analyzed over the last almost 2 years now, a little bit more than 2 years actually, and I have entered the cash flow numbers that he has estimated, and I've calculated the current rate of return over 10 years based on assuming you would buy the stock now and hold it, based on his numbers, which now some of those only go 8, 9, or 10 years depending on when he did the video. But so this was all using just his numbers, didn't change any of the numbers. Of course, I may have made a mistake, so you will want to look at this as not, definitely do your own due diligence, and this is just a tool, I guess, to point out potential stocks which we may have forgotten about, and which opportunities might be there that we're not aware of. So sorting by the current rate of return for all these companies, I'll start lowest. Right now showing AMD is negative 22%, but I'm guessing he would probably up his IRR if he could redo that video from May of 2020, which is when he did it, and I think they've shown pretty strong profit growth over the last 2 years. Still probably overvalued, but he had it as ugly, and you'll see here Nvidia has negative rate of return right now as well. But anyways, so which companies are doing the best right now based on his numbers? And I will just sort this the other way. We can see, okay, so there's this company called Appen Limited, based in Australia. It's like a artificial intelligence modeling software. It was 20 when he reviewed it. He had a target of 97 over 10 years, and it's actually gone down to $5 right now. So that's pretty intriguing. United Airlines is actually the second highest IRR based on his numbers. 40%. Next, Trulieve Cannabis. It's less than half of what it was when he reviewed it, and the IRR was 23 when he did the video, and now it's, based on his numbers, is almost 40. It's a pretty amazing opportunity there. Magna International, almost 40. Fevertree Drinks, 35% currently. And again, these are just based on Cameron's numbers, and if he would redo some of these videos, I'm sure these numbers would change. But next, IBM and Intel, JD.com, I think that's a Chinese company, so I personally would stay away from that. But next is PayPal. PayPal's looking pretty attractive right now, almost half of what it was when he reviewed it, and after he reviewed it, kind of made of, oh wait, no it didn't, but Alibaba, AllState. So I was kind of surprised to see AllState up there. That had a really high IRR when he reviewed it. He actually made a mistake in his video where he had the wrong current share price, so his IRR was actually too low. And so I fixed that in the calculation. It's showing is 28% right now. Of course, based on his numbers, all these are based on his numbers. Projected cash flows, that is, over the next 8 to 10 years. JetBlue, AB InBev, the owner of Budweiser, a bunch of other beer brands. That one was a meh, but for some reason, I may want to check this number. That might be a mistake, but showing is 27% right now. Anyways, Canopy Growth has... Okay, so this Inbev, I remember that was because he had projected no cash flow for the first few years, and now it's hitting the point where he projected cash flow. That's why that number is higher like that. Canopy Growth was rated as ugly, but it's about 1/4 or 1/5 the price that it was when he reviewed it, so that might be something there. Facebook, this was the first time he reviewed Facebook, showing an IRR 24, and let's find the most recent one. That IRR would be 18. So going back up, next is Altria Group, AT&T, Delta, Southwest, and Berkshire Hathaway. And then we have Zillow. So that one is actually about half of where it was when he reviewed it. He liked the company at the time. I think it checked the boxes except for being reasonably priced. And that IRR has gone up quite a bit since the price has gone about in half. So anyways, thinking I will do videos like this maybe once a week, just kind of update everyone where which stocks are currently, what their current IRR is based on the current share prices, so hopefully it's useful to someone. I know that was kind of interesting for me to see these, but thanks.